Welcome to another episode in the Hyblock Learning Series, where we dive deep into powerful tools and indicators to sharpen your market edge. Today, we're focusing entirely on one category: order book indicators. First, let's start with what an order book is. An order book is a real-time list of buy and sell orders for a specific crypto asset, organized by price. It gives us a peek into real supply and demand. Let's begin with the basics: bid and ask, and the bid-ask ratio. A bid is a passive buy order, someone waiting to buy at a specific price. An ask is a passive sell order, waiting to sell at their price. The bid-ask ratio shows the balance between demand and supply, whether buyers are dominating sellers or vice versa. In short, bid imbalance is equal to bullish bias. Ask imbalance is equal to bearish lean. Next up, the global bid and ask. This one's special. It aggregates order book data from more than 1,400 coins, giving you a macro-level view of the spot market. Unlike typical single exchange tools, this reflects broader sentiment and is much harder to manipulate. More demand is equal to bullish. More supply is equal to caution. Now meet the combined books indicator. This shows total liquidity, both bids and asks, across multiple exchanges. High combined liquidity often marks a rally peak. Low combined liquidity can hint at rally bottoms. Use it to spot extremes and inflection points. Next on the list, best bid and ask. It shows the highest current buy price and the lowest sell price. The space between these lines is the bid-ask spread, and that's our next indicator. The bid-ask spread represents the cost of market execution and shows liquidity strength. Wider spreads is equal to more slippage, lower liquidity. Narrow spreads is equal to deep liquidity, smoother trading. There are two metrics: average spread over time, max spread at peak volatility. These help evaluate market stability. Moving on to the bid and ask cumulative delta. It tracks the net imbalance of buy versus sell orders over time. You can analyze this across different depths, like quote level, 2%, 5%, 10%, full book depth. This helps assess where and how deep liquidity is concentrated. Our final indicator is the newest, bid and ask delta. It shows the real-time net difference between bid side and ask side liquidity at any depth level. Positive delta is equal to more demand. Negative delta is equal to more supply. Simple to read, yet powerful. Let's now tie all of this together and build a practical strategy to spot alpha using order book indicators. Set up a template with bid and ask ratio, bid and ask delta. Combined books. Use a 5% spot order book depth for consistency. Now let's apply highlighter rules to draw attention to key moments. In bid and ask ratio, highlight anything above 40% as significant imbalance. In bid and ask delta, look for extremes: above 120 million, below negative 200 million. For combined books flag levels, above 500 million, below 250 million. When multiple indicators light up in the same direction, that's your confluence. That's your edge. And in this case, it lined up with a clean upward move on BTC. No noise, just data-driven alpha. So that was your complete walkthrough of Hyblock's order book indicators, plus a strategy to put them to work. Start spotting imbalances, read the flow, and stay ahead of the crowd. Thanks for watching. Don't forget to subscribe, try these indicators in your own setup, and keep building your trading edge with Hyblock Capital.